Hey, welcome everyone. Today, so far, or this week in the live trading room, a couple things that we wanted to point out. And we've illustrated this both in tweets, following up with our weekly thoughts and observations. And again, our concepts of looking at a few important data points on how to trade the market. First and foremost, we've had a long position in Spider since, as you can see, in the live trading room, we've carried this spider trade over for the last 3 days. Next, we are currently the algo system short VXXB. Now, if you're trading volatility, VXX went off the board because it expired. It was a 10-year, it was a note, effectively an exchange traded note. Now, the big product that we are using on our algo system, and everything you see here is based on the Person Algo Optimizer program through TradeStation. This is the VXXB, and currently it is still short. We're more than likely, if we, just giving some insights on this strategy, if it breaks down below specific lows, it will more than likely exit the trade. It exits the trade on a few things: trailing stop function, holding period function, and again, if max profit is exceeded. Currently, our really neat thing is looking at the crude oil market. This is a 5-minute system, and you can see long currently 2 contracts in crude oil. This is a really nice trade. It's riding this thing out. What's amazing about the crude oil long is it now will reflect, if we close greater than my tweet that I sent out and the LinkedIn article that I posted above that 5478 number. What do? We create an inverted head and shoulders bottom breakout pattern, and that, my friends, we want to just eliminate taking day trade shorts and only take long. So this trade's up almost approximately from the entry on this position, we're almost up $1,600 on 2 contracts for the day. The Algo Optimizer had a quick go at it, nice stop out on a failed move on the unemployment report. With the euro currency, it went back in. It trailed the stop, as you can see. Current position, short the market. And then again, while we're getting some pretty wild ranges in the euro currency on a 15-minute basis today, the system trails stops, just like the crude oil right here. The profit target was the blue line, but it will trail the stops. Now let's go over and look at the, and I want to point this one out because this is our futures position model for the trade room on a 5-minute basis. Basically what we see is it's taken some shorts and scales out pretty quickly. By the time it reversed course, notice that there's no longs taken. Because, quite frankly, the longs, by the time it generates a long position, the risk is too great, and so therefore you don't see any longs. But the irony is it's taking shorts today and making money. So what does that tell me about the internal structure of a market? It's telling me after a big run-up all week that shorts are taking profits. And so while day traders, I think one of the things that we post in the room is to confirm these day trades. What do we use for confirmation? Well, if we have a big run up in the market, all right, and you start to see the volume trail and weaken, our proprietary histogram component starts to weaken. Stochastics is in a weakening position. Our proprietary volume model is also showing the divergence, or at least the momentum is declining. Leading up before the signal, we can look to take the trade. Now, see this word here, trail? This could have turned into the biggest winner ever, but what did it do? It came close to a profit target and it trailed out, banking the money. So again, same situation. Look, while we rally up again, look at the conditions of the market. Weaker volume, stochastics in a position of weakenings, and then we're just clipping the market off. And so that's the algo strategy for the trading session. Now, what are we going to do for the rest of the day? I have no clue. This is a very impressive overall market as far as what we saw this week, number one. Number two, you will also kind of be lookful for our trade room and some of the comments that we've been talking about. We've seen in our trade community that the algo traders that the E-mini S&P, the 10-day ATR is now 36, the 5-day is 29, and those readings are sharply lower from December's 96. So that means we're getting very narrow ranges and more the markets turned back to normalcy. And so one of the things that we want to point out in the room, while we have our main trading room, we also have our algo room that I was reflecting. So we have two rooms running at the same time. Stuff that we're looking at like long GE or current position long XOP with the trailing stop, and we're going to probably get out of that trade today. And one of the reasons why I'm suggesting that is right down here. While crude oil is breaking out, the energy sector ETF is not yet making a correlated move. In other words, we haven't even taken out the highs in XOP. Could this be delayed? Well, we've been in this trade since 23 and change, and we're trading up around 30. So we've probably extended the time in the trade and more than likely could see some kind of a pullback in the next week or two. So today, Friday, we're pulling the plug on XOP, still staying long the energy stock Occidental Petroleum. Now, we've had a couple of really good things here, especially when we go and look, and I'll share this with you right now. Look here in the WD. This is Genesis platform. Really stable, amazing platform for chart and graphing. And first and foremost, this is the Aussie dollar. One of the concepts that we were looking at from quite some time ago, and we actually tweeted this out too. Many people may not remember this one, but what we looked at was going back from a weekly chart. The Aussie made this amazing, and you can see our research and our work already. The Aussie dollar had this huge decline, just stopping everybody out and their brothers and sisters, but leaving a known pattern of mine called the jackhammer. It makes a secondary lower low, forming creating this long wick with this is a hammer pattern, taking out the lows with the condition of volume convergence. Now, it's also that green arrow is a PPS buy signal. So what we're looking at here in terms of chart pattern is not just the price action forming a bullish convergence with volume. It's the actual follow through that makes sense to us, that why we would look for further upside. Now, what I did here was illustrate to our own trading community the redundancy of Fibonacci and why I personally, while I agree that Fibonacci is useful in the technical trading world, it's not something that it's too redundant for me, and I believe there's a better approach, and that's why we have Person's pivots. First and foremost, we have an old level of resistance in the charts, last conditional change, this red candle here that dates back since way in the day, August 31st, and that area was rejected by a secondary attempt back in December on the week ending 12/7. Now, we're starting to see an accumulation. Funny thing about the Aussie dollar, from a seasonal perspective, it rallies in the Q1, number one, first for starters, and number two, if we start to see maybe compelling evidence that we're dealing with China, or maybe that the world economy is stabilizing, we can start to see, and the Fed here in the U.S. backs off on raising rates. It gives a chance for maybe the Aussie to get crawled back to where it once started. So that's number one. The weekly chart helps illustrate that. Second, we noted that while we had a weekly buy signal, we were also looking at a daily buy signal, which followed through. Now, let's go back and say we've got a daily PPS buy signal that's in sync with a weekly buy signal, and that's very impressive. Our technical work suggests that while we also want to see what other traders look at, and if a lot of Forex traders are looking at Fibonacci numbers, they're probably looking at Fibonacci extensions. So if you get trendline analysts, if you get currency experts alike that use various forms of technical analysis, and they all see the same thing, maybe perhaps when the market gets up to that level or profit zone resistance, it's going to be like a self-fulfilling prophecy. So we have a redundancy and a correlated area of resistance based on old chart patterns, pivot point analysis, and now Fibonacci extension analysis. And by the way, if we take a look at the low here that we made on January 3rd to the high, and look at the swing low here, and we take an ABC and Fibonacci extension, 618 extension off of that low, gets you right up to around 73.40. So what we're looking at here from a further perspective, by the way, gang, is just real simple. And this is what we were looking at on a 60-minute basis. This is what we will call a Marabuzzo candle, and the midpoint acts as support. Wow. Now, if we close today or next week, Monday, Tuesday, and we close greater than this 72.79, guess what? We have now profit clearance to the upside, and the market's going to more than likely do what, do you think? It's going to see an expansion and test and break out with the current dominant trend. What's the dominant trend? Weekly's up, daily's up. Pick your choice. But we believe that in this environment, we want to be buying breakouts when the market proves it's strong. This is part of what we're doing in this two-part class here, is how to put together trading strategies for traders to profit and have better market analytical skills, and also which side of the market to stay on. So here's the key. I know there's a lot of Forex traders that don't believe in futures, but you Forex traders, you better be paying attention, gang, because this is one thing that you've been missing for the last 20 years or longer, is that you don't have volume analysis on your side. And volume trends are very important, and that's what gives us the edge in the market. So a couple things that I'm looking at. If the market's truly bullish and the person's pivots for the day suggest that the market is a bullish outlook. Why? Because we have a projected higher high and a projected higher low. We are looking at, if the market's truly bullish, then the market should be what? Trading back above its pivot, the blue line. So that's why we have this green line in the sand with an arrow pointing up. If we can close on that 60-minute chart back above the pivot and that resistance that has been holding the market hostage here, then we're going to see an extension forward. Might not happen today, could happen on Monday, but by the way, we're not taking longs until the market breaks out. So when you look at, if you miss a pullback into support early in the morning at 2 a.m. and you're not up for that, well, that's one thing. But coming into the U.S. session, no one's to say that we can't keep our eye on the prize and look for further upside. That's just one of the techniques that we utilize and put together by combining person's pivots with our algo strategies and have together in place for our live trading room. Our community allows, number one, to be able to look at strategies, number one, as they happen live, and two, to also look at one of the areas that we've been covering from a intraday discretionary standpoint. So currently, a couple things just happened. As you notice here, the intraday signal on the 5-minute ES just went with a PPS buy long entry, number one. Number two, it looks like the crude oil just eliminated or just took a profit on the long position that we were talking about while we were giving you an example of the Aussie dollar. So we'll see how that manifests. Currently, it's short a couple positions here in the euro currency. We're still in that short on the VXXB. We're still in the long position on the spider. That's pretty much a wrap up of what we've been doing here, and I look forward, if you guys are interested in more about what we do and how we kind of look at different markets and trade these markets, come join us in our 2-day second part webinar on Saturday. Thanks, everybody.